think part of it's liquidity. I think part of it is I think we're in a high period of I wouldn't call it euphoria, but certainly some areas are euphoria. And it's basically it's also a view like a lot of investors don't know where else to go. They're like, oh, I'm not going to go to Europe and invest. I'm not going to invest in China. I'm not going to invest in emerging markets. And so they kind of just stick to quality. I think there's a little bit of a bubble in, ironically, high quality US stocks. So, for example, Costco, great company, but they're trading at like 45 times earnings or something like that. And it's a 40-year-old, retail wholesaler. And again, they're doing great. But in most market conditions, 45 times earnings would not be the appropriate level for that. There's a lot of stocks like that, and so I think that there's multiple factors going into that. I would, despite the fact that I see signs of economic reacceleration, despite the fact that I kind of view the fiscal backdrop as like a basically a slow motion crack up boom. I would still be very careful with individual overvalued equities, ones that there's a lot of euphoria baked into. It doesn't mean they have to go down. They could at some point go sideways for a long period of time and fundamentals catch up. But basically, if you want to optimize risk and returns, you want to be careful of things that are already heavily overbought, heavily leaned into by capital, and focus on things that are doing well fundamentally, but don't necessarily have that big valuation bubble attached to them.